Hi traders, welcome to another episode on the trades we missed last week. So moving on Monday, last week Monday, we had a bullish fair value gap here. So we had one fair value gap here. You can see how price comes down to tap into this fair value gap and bounce from it. So this is it here. And the next thing we'd look for is a break of market structure here. So this was 1 a.m. on Monday. So on Monday we had a fair value gap and a break of market structure. Next thing is a fair value gap here. So you can see our fair value gap here. We highlight it like this, and we have a tap into it, and this tap will signify our entry. So this is a long position here. Our stop loss below this low here, and our entry at this fair value gap here. So the next up would look for a TP. So we can actually put our TP at this high here. So this would be our TP, giving us a 3.06 risk to reward ratio. While looking at things, you can see how price comes back to tap into it the second time. So if we missed this entry, we would have entered this second entry here. So at first, price respected this fair value gap here, this void here, and comes down, tap into this fair value gap again, and boom, push to the upside. Then we hit our TP here. So next is our trade number 2. So here we have our trade number 2 as a bullish trade also on our 3 minutes time frame as usual. So we have a fair value gap here. As you can see, this is our fair value gap. Price comes to tap this fair value gap, push to the upside, and give us what? A break of structure here. Price closed above it. The next uh, thing to look out for is our fair value gap here. So we have a fair value gap, and this signifies our entry. So the whole of this is what we use for our risk. So having said that, we have our long position as usual. We expect price to tap into this fair value gap and stop loss here below this low. Then at the top of this fair value gap would put our take profit at any given high or any given fair value gap that might obstruct our push to the upside. So we have a push to the upside already, and this can be an hindrance for market to reach this high or this high. So we stop here because this is a fair value gap also. So now we have a 3.76 risk to reward ratio for our trade number 2. Moving on to our trade number 3, which happened to be a bearish trade. You can see as price taps into this fair value gap here, we now have what? A break of that previous low, and also a newly formed fair value gap here. So at the start of this fair value gap to this spot here is where we put our risk. So this is our risk here to this top here. So that will be our stop loss. And at the start of this fair value gap is where would would wait for market to tap into. As you can see, market actually tapped into this fair value gap For our short position, we have it here at this spot here. Then our stop loss will be at the high here that created for us that second fair value gap, which broke that structure. Then our take profit would be at a previous low. You can as well use this low, this one, or you can use this one for maximum TP. So this would give us a 2.69 risk to reward ratio as market taps into this area here. For our trade number 4, it happens to be a bearish trade also. So we have a supply here coupled with a fair value gap at this spot. So price comes to that area and bounces away from it. Not just bounce away from it, but you can as well see a low being taken out. So this is a break of structure here. We have a break of market structure here, and along the line we can see our fair value gap here. So this is a fair value gap here, and this break of market structure also created for us a field order block, which has now become our breaker here. So a breaker coupled with this fair value gap will give us an optimum entry. So we have for ourselves a bearish trade, a short position right here at this fair value gap and this breaker here. So we have our stop loss right here, our entry here, and our take profit can even be here at this previous low, giving us a 1.72 risk to reward ratio, or this low, this one here. This can give us a 3.55 risk to reward ratio, or this one right here. So this is 5.79 risk to reward ratio for our trade number 4. So the next in line is a bullish trade. So this bullish trade now, we can see that we have a break of market structure here. Why this was not counted as our number 5 trade was because it would be easier for us to see our fair value gap close to us. Now this fair value gap can be seen from a mile back. As you can see, the fair value gap is here. So it's easier for you not to actually take note of that, and for the fact that we are trading from a lower time frame. But still, if you're using a top-down analysis, which is best, you can actually go back in time to really see where the market is pushing from. So let's say this is our trade number 4.5. So you can cite it like this. After market tapped into that fair value gap here, there was a break of structure here, and this fair value gap was our entry. So this one here would be our entry area, and this one here is our stop loss. So this is how we do our trade here for our long position. Here our entry, stop loss will be here at the previous low, then at the immediate high, swing high that you can see here. This would give us a risk to reward ratio of 3.5, 3.6 risk to reward ratio. So the next is actually the trade number 5. So we have a bearish trade here. So this bearish trade, you can see that price is coming from a fair value gap here. There's no fair value gap, price is coming from here, but we can see a fair value gap here. This whole stuff is fair value gap. So I just highlighted this one because of the order block here. So we have a fair value gap here, and price comes to tap into it here, bounces to the downside, but fail to break from it and close. It did not give us a close below it. So this fair value gap won't be so valid. As you can see, ran to the price just goes up to the fair value gap for the second time here. So we can see an opening that price respected. So this is giving us a bearish signal still. So price comes to this area, tap from it and break structure here. So we have a break of market structure here. Using this bearish candle because it's more easier for you to notice that price actually broke a bearish candle. So now price breaks it and taps into this fair value gap. So this would be our trade. So at probably the middle of this fair value gap would be our entry, because the fair value gap from here to this spot is actually too wide for us as our entry to be giving us a possible 1 point or 1 to 1 risk to reward ratio. So it's best we actually limit that. And moving on, you can see our take profits can be here, this low here, and this is giving us a 2.33 risk to reward ratio for our trade. And that was our bearish trade for uh trade number 5 here, trade number 5. So next is our trade number 6. See that same fair value gap, price rallied to tap into it, giving us another entry. Yes, if we miss this entry, we had we can actually see a trade number 6 here. So this is a short position because there's still we can still see an opening here. So we are going to use this as inducement liquidity which was taken out, and wait for price to take it out, tap into this fair value gap and push to the downside. This would be our stop loss still, and our take profits won't be that same area again. Our take profits would likely be this one here. You can use that same take profit because price had already taken it out with this. So this is giving us a 3.13 risk to reward ratio, and that was our trade number 6. Moving on is our trade number 7. Let's push to the right side. Now we have our trade number 7 here. You can see a fair value gap here, right? This is a fair value gap here. The fair value gap here. Market comes to that fair value gap, taps from it and push to the upside. So we can see, let me put this aside. This fair value gap, I light it first. Okay, market is respecting this fair value gap coupled with this breaker here. So after market taps into this fair value gap, push to the upside, you can see a break of structure here and a newly formed fair value gap at this spot here. See a fair value gap here. Now we have this fair value gap and this other block here. So this is going to be our trade. This low is so close to this, so we use this as our stop loss. So this is how it will be. So as price comes back to tap into this fair value gap, we would expect a push to the upside. Long position here, and we have our stop loss right at that low here. That is where our stop loss would be. Our entry just at this other block of fair value gap. Then our take profits would be at any recent high that seems favorable. So we have our trade like this. This is giving us a 2.83 risk to reward ratio if you had stopped here. So you can see how the trade just went up to the sky to reach this spot here. But you don't have to be greedy and use this area here for your take profits. You can see it's boom, markets hit your TP. And that was our trade number 7. Moving on is our trade number 8. And you can see a fair value gap here. Let's put this aside. You have a fair value gap here. This whole spot like this can also be your fair value gap. And see market tapped from this space here to the downside. And you can see your break of structure here and your fair value gap here. This is your fair value gap here. From this spot to this spot will be your risk. So you can see it. You can just use the other block here. So this is the fair value gap. The whole we can align the whole of this fair value gap. So market tap from it, and you can see how we have our entry here after the break of structure. Short position here, and our stop loss here. Our take profits would be at that previous low here. There was a previous low that was cited at the left. You can also check it out when you come to the charts and you check for Wednesday by 8 a.m., 7 to 8 a.m. So this is trade number 8, giving us a 3.41 risk to reward ratio. So you can see, boom, we have a TP here. So that was our trade number 8. And moving on to our trade number 9. So this is a fair value gap here, bearish order. You have a fair value gap here. All these are bearish orders. So this fair value gap can also indicate that if price comes to this area and reacts from it, when we see a break of market structure and a newly formed fair value gap, it can also give us a good setup. This is a break of the previous low, a break of market structure. Then we have a fair value gap here. So the trade is complete. So now this is how our entry will be. Short position here. Our stop loss will be here at the top of this previous high. Then after entry here, you can put your TP at this spot here, giving you a 2.16 risk to reward ratio, or this given low here, giving you 3.32 risk to reward ratio at this low here. So that was our trade number 9. And the last but not the least, we have our trade number 10 right around the corner here, giving us a bearish trade as well. So this is a void. You can see this is a void, giving us a fair value gap here, and you can see how price reacted from it here. Normally, when we see things like this, when price wants to react from it, it's definitely reacts from it well. So we have a void that needs to be the price needs to react from or fill up. Now, after price reacted from this area here, from this whole spot here, we can see a break of structure here. This is a break of structure. We have a fair value gap here and order block too. We have a fair value gap here. So from this fair value gap and order block, we can take our trade from them. And we have a short position right here. Our stop loss will be above that previous high after our entry. Then we have our TP here at this low, giving us a 3.22 risk to reward ratio, or this low right here, giving us a 3.85 risk to reward ratio. So that was our trade number 10. And the next would be this week's trade. So let's go on to our chart and check for trades like this that fit into your own strategy. And we'll meet on our next episode on the trades we missed last week. Stay tuned. Peace.